All right. Good morning, everybody. Happy Tuesday. It's March 14th, about 9 a.m. my time. So we're a little bit into the US equities open here. And of course, this morning we had the CPI data drop. I mentioned it here in the chat earlier this morning. So the year over year estimates were 5.5%. And the data that we got was in line, which was 5.5%. And then that was core CPI. So I think core means like food, energy, and I think rent, if I'm not mistaken. And then this is overall CPI, which is, everything in terms of energy, food, rent, plus like gasoline, plus, other foods, other services, all other, categories that are measured in CPI. All in all, the CPI data seemed to be in line with what the expectations were. And so I think that kind of gave markets, again, a little bit of relief, a little bit of boost. And of course, the past week, right, we had this whole Silicon Valley collapse, and we had Signature Bank. And I've talked about this at length in my video yesterday. We also talked about this a couple of days back, where we mentioned that, hey, when you start seeing Silvergate, Signature, and SVB, these are three big banking institutions that are, let's just say directly tied to crypto banks or crypto projects, let's just say, right? First of all, this is not a good thing in the long run. And I had also mentioned this through this post that Jeff Dorman had written, right? Long term, he's kind of stated that, hey, this could be very bad in terms of crypto growth and reach and innovation, but short term, it is almost certainly positive. And it's positive because those banks, Signature and Silicon Valley, and at least like Silicon Valley, I think got basically a bailout from the Fed. And I think Signature will, the holders and depositors will probably be made whole, meaning basically everybody in the banks who deposit their money will not lose money. But those that hold equity in the bank will probably lose money. Now, why is that bad for crypto in the long run? Well, it's bad because what you're now doing is you're setting a precedent for banks that the Fed and the regulatory agencies and the government are already aware, like, hey, at this point, we don't really like crypto, right? That's what they're really signaling. And they're basically signaling it by, I think in some ways trying to cut off banking connections with the crypto world, maybe even, warning other banks that, hey, if you bank other crypto funds or exchanges or projects, you're going to have a lot of trouble on your hands. It could be basically like a hostile takeover or shakedown. Let's just say it's like a mob mentality. Our job is not to judge and try to be the moral police of what's right and wrong, what the government is doing, what the Fed is doing, because we have no control over that. Our job is to recognize what it means for markets, right? Because as a trader, as an investor, that's what you need to be paying attention to. Now, as Jeff said right here, as I believe too, it clearly seems like short term, BTC has taken off like a massive rocket ship, right? But again, we're still kind of hovering around this resistance point. And I don't necessarily love that, but I think it's good that we've pushed up way the heck up here. So for now, it's definitely a good sign, right? We've pushed up all the way to about 26K, pretty much tagged this area of resistance up here. Now the question is, okay, well, where to from here, right? Do we start putting a leg up higher? Because, hey, it looks like we've now created somewhat of maybe like a double left shoulder with a inverse head and shoulder style pattern like this. And do we start breaking out all the way to 31, 32K? Because that's the next big resistance point from all the way in 2020, 2021, and 2022. That's the next resistance point right there. Do we do that? Or is this simply like, hey, we've now hit a critical area of a pivot right here. This is the yearly pivot. And then from here, we're going to just chop and create a range. Is the range like this, where it's a range bound environment for the remainder of the year? Maybe, right? But like Jeff said, and like I said earlier too, is, I can clearly see the cases that are being made for BTC and crypto and more upside. And that's great. I'm not going to fight that. You guys know very well that we've, in my opinion, positioned ourselves decently well. So, so far in the market, right? Because what we've done effectively is we have, let me see where my positions were. Okay, so right here. All right. So my position was, I had gotten into this trade like in the middle of February, right there. And I'd gotten in on that first leg up to 24.5 or 24.25, sorry. Right. So that was my first initial capital size. Okay. And I bought that as spot. I pretty much converted that trade into spot rather than leverage. Second trade was, I was thinking, okay, well, this thing looks like it may pop all the way to 50 fib or 618 fib, which is around 42 to 50K. And I kind of still believe it can, but then the market kept going down. So I was like, okay, well, maybe I'll buy some more right here. So I first bought at 24.3, then I bought at 22.3. And then a couple days back when the market was nuking all the way to $20,300, I bought some more. So now I'm decently sized in that position. And my average was right, like I think 21 and some change, because I kept adding on the way down. And by the third add of my position, I was pretty heavy sized, and I don't think I wanted to add more. So I'm so fortunate that the market just squeezed up. Obviously, I sold out at 24.5, and the market is currently trading at 25 and 25.6 or whatever, 25.7. So I missed out on that extra little $1,000 pop, right? But again, I'm not really someone who likes to, try to pull the trigger on shorts or longs at the tippy top or the tippy bottom. Okay, it's just like not my game. So I'm glad in terms of averaging my position, right? Being able to average my position from here, getting out somewhere around here. That's a nice 14 to 15% move I caught, and that was with fees. Okay, so I close out on that trade. Now I'm just sitting tight. I am not taking any trades in the market. Okay. I have this trade still active. And again, same thing with Blur. I kept adding to Blur because I was a little bit more confident in Blur that it would squeeze back up. My first position had opened at, I think, where was it? I think like $1. And then I think I added a little bit more. At 85 cents. And then I added a little bit more. So I averaged down to 94. Then I think I added a little bit more a couple days back. And then at 47 cents, I added more. Actually, I added like a decent amount at 47 cents. It's kind of hard to convey because I don't really like giving dollar amounts because it's just weird to me. But all in all, now my entry average is 76. And guess where Blur is trading now? At 70 cents. So far that, average down mentality has paid off, right? So basically, from 76 to now, I'm only down 7%, which is not that bad to me. So all in all, now if I look at Blur, the next big levels for me to watch on Blur are around 90 and around $1.20. Okay, I think it's fairly easy to squeeze all the way up here. And if I can close out the trade somewhere near range high at $1.20 or maybe even somewhere around this high, $1.25, I don't care what happens to Blur after, because then I'm going to be looking to see in this area, can blur be sustained above this level, right? And can it leave all this behind? In which case, I would then open up a new trade here. But I would definitely be thinking about closing my blur trade in this $1.20 to $1.40 area, because that is clearly a range high zone up here, right? I may even close at 90, part of my position, but more likely than not, it's probably $1.20 to $1.40 up in this region here. Okay, so far I'm very fortunate to have been played the hand of, BTC popping up the way it has, collecting that nice 13-14%. And more importantly, even my BNB short played out really, really well. I posted about this a couple of days back. We had entered right at the tail end of February, BNB short at 303, collected a 10% profit on 273, and then I reduced my stop to 290 from 303. So either way, if I get stopped out, which I did, my stop out would still lead to a 5% profit. So overall, I collected about 7.5% on this entire trade. So this has been a pretty phenomenal trading month, for me, just because I didn't really take that many trades, and they were all very methodically placed trades with not heavy size, with not too much risk in a market volatility regime that is incredibly hard to navigate. And when you make good trades like that in a tough environment like this, and you've now collected a little bit of profit and you feel comfortable, even if the market goes higher, you now have more capital to play with and not needing to take on as much risk. Because if you were wrong in the other direction and you kept shorting on the way up, or you kept longing on the way down and you puked your longs down here and the market shot up, either way, if you just made a couple of bad mistakes and you compounded those mistakes, it really sucks to be in that position. And I get it. I've been there before. We've all been there before. But when you make a couple of decent trades where you don't really need to trade a whole lot, like I did with the BNB short, with the BTC leverage long, and the current blur position, right? You're now in a position of power, and you're in a position of strength, because you recognize that you are capable of managing and handling such incredibly volatile conditions, especially in the face of the banking collapse and all this random shit that's going on in traditional finance and in equity markets. So if you're here and you're standing and you're doing all right, pat yourself on the back, because you deserve it. Okay. Now the game is, a little bit different. Now the game is, okay, well, do we now start believing the likes of, people like Arthur Hayes who are talking about, hey, there's a new bull market starting, and, the printer's going burr and whatnot. Do we want to buy into that theory or that kind of mentality? Or do you still want to be cautious? Personally, I think Arthur has been, let's just say, just as equally as right as he has been wrong. Okay, so in my opinion, he's no greater than, let's just say, most traders. I mean, I think he's incredibly smart, probably more smart than I am. But to be fair, he's been also wrong many times in the past. So the question is, if you look at what he's saying, his whole theory right now is he believes that there's a new bull market starting because of this, banking collapse and the Fed printer going burr and whatever he's talking about. But I don't really think it's as easy as that, because inflation to this point is still relatively high and is still a concern for the Fed. And I don't think that inflation being high and equities positioned the way they are, given that they're now back inside the 200-day moving average, back inside this wedge that they had just broken out of, I don't think they're actually in a position of strength. Okay. In fact, you can make the argument that they might be developing a bigger form of weakness that may be developing over the month of April and May, in which case I would probably say, yeah, maybe BTC has a little bit higher to go, but it doesn't mean that BTC can't have a big nuke on the downside or come back to 20K or down here. Again, I don't really want to start talking about those situations, but you can't ignore the environment that we're in and how the Fed has effectively stated that they're trying to slow down the economy. They're trying to slow down, probably equity markets too. They're not outright saying it, but they've been subtly saying it many which ways. And not only the US, but it's global central banks around the world, because they have to tame inflation. They need to be able to correct the excess liquidity and the excess money that got printed in 2020 and 2021. So that may take an impact on markets, and that may take several months or maybe even another year or two to play out. So the game is that, yes, I want to, buy into the whole Arthur Hayes talking about a bull market and money printer go burr and whatnot, but I don't think it's that simple. And I don't think that you need to necessarily buy into that theory 100% either. It's okay if you buy into the theory with, I don't know, maybe 10% of your capital, maybe 15 or 25, but maybe not 100%. Because if you're buying in with 100% for more upside, especially after the market has moved up so rapidly from the lows, right, you might be baited into a situation where fear is building in the financial system and you think that BTC and crypto are the risk-on assets, when the reality might be that they might be the risk-off assets sooner, and they may reverse, some of this movement in the next coming weeks. So just stay, on the fence is what I'm trying to say, right? Take your money, take your longs. And again, I'm not someone who's betting against the environment. I had this one BNB short the entire month of February. That's it. Once I close that out, I got no interest in taking shorts right now. I don't care. Even if, Arthur Hayes is right or wrong, I don't care about taking shorts in this environment, right? Because it's just not worth it to me, okay? When the market gets really, really excitable and people are downright talking about new bull market and FOMO, which I don't think has happened yet, but once that does, then I'm interested in taking shorts. For now, it's possible that many people are sidelined and they're just making excuses why not to participate in this market. And when they have that kind of attitude, why they don't want to participate in a market, that could be fuel to the fire that adds to more upside. So I'm completely with Arthur Hayes on that front. Like, okay, well, we could have more upside, but I don't know about a new bull market is what I'm trying to say. All right. Now, aside from that, I talked about Blur, right? There's other assets I'm still paying attention to, the gaming sector. Please still keep an eye on assets that you've been doing homework on, okay? We've mentioned Fetch a couple of times, right? Fetch is one of those AI-driven assets. PHB, same thing. We mentioned PHB right at this like 87, 90 level a few days back. I mean, now it's up 20, 25% from the lows, right? So these are the kinds of plays that I think I dropped this in right here. Fetch, INJ, Atom. I think someone else asked me about PHB. I should have had it on this list. But the point is, these are the assets that I mentioned were on my radar. This was 4 days back. 4 days back, Atom was trading at $11. BTC dominance was also low. Fetch was trading at 31. And INJ was trading at 280, right? Now, Fetch is at 42, INJ is at 433, and Atom is at almost 13 bucks. I mean, just, phenomenal movement so far, right? So in my opinion, I think we've played this incredibly well. Unfortunately, I didn't get to pick off any of these positions really at all. I should have. I should have bought into some of these because, but again, I'm human, right? Some of this fear and all this stuff, it also plays with your emotions. So I just kind of said, well, I'm already in a BTC long position. My thought process was, I expect dominance to pop up. And I also stated that, hey, I do think that these alts are oversold and they could rapidly pop up, which they did. But I also say that you can kind of see, BTC dominance is rapidly declining. Usually when this happens, alts have the upper hand. But for me, what I'd stated was, or was it a couple of days back before that, right? I do believe that it's possible that BTC might be the better trade, okay, for upside rather than alts, simply because I believe that the market was incorrectly positioned for alt upside versus BTC upside. And guess what? We were technically right in that, right? BTC actually rapidly moved up and put in a higher high, whereas alts are still lagging behind a decent amount. Maybe they catch up sooner or later, but for the most part, BTC was probably the best trade, right? Which we, like I said, took advantage of. So yeah, I missed out on a couple of those alt moves and stuff, but I caught BTC. Okay. So now where I am is a pause mode. We've now had some major events behind us, such as the Silicon Valley Bank, this banking issue that we had, and then we had CPI behind us. In next week, okay, next week we have FOMC. Okay, so where is next week? FOMC next Wednesday. So I believe the market will probably trade into a range and chop about up until that point next week. So in 6 to 7 days, I think maybe, you can hop on the bandwagon of some of these alts, but for the most part, I think it's better to wait, or at least start de-risking some of your longs headed into the event, because that's alts are moving up into the event of FOMC. I find, no reason to start longing now. If you're already long, or you're catching some moves now, or you're already positioned long, that's great. Aside from that, I wouldn't really touch the market in terms of long upside, because your downside, right? Like you have a big candle like this, well, your stop's got to be 6 to 7% deep. And your upside, like it's capped at 13.5 right here, because this is the big SR level on Atom. Same thing, like if you look at ETH, well, you've already taken out the highs from the last 2 or 3 weeks on ETH. Okay, what's the upside here, right? Because you've had such a massive monumental move. Well, you gotta keep your stop at minimum below, this low right here, 1650, because that's the key SR level. That's a stop of about 5.5%. Where's my upside? I don't know, maybe above this high right here. 2.5% gain, maybe as high as like $2,000. That's again, if you have a massive squeeze in ETH, that's 12%, right? So point is, at this point in the market, it probably pays better for you to be a little bit more cautious and hands off in terms of the long side of the trade. You could make the argument that, oh, well, shouldn't we start getting short? I mean, maybe, again, I'm not really interested in shorts right now, just because I think it's a little bit too early. Maybe like quick, level to level, like if this is your short positioning right here, back into 25,200, okay, that's a 2.5% gain. Maybe you think we're going to drop right into this pivot. That's about like a 7 to 8% move around $23,700, right? With a 2.7% stop. But again, I think it's going to be incredibly choppy up here. By the time you get positioned into a trade, this thing could do this kind of crap and then break down. So do keep in mind that when you start entering shorts, especially in a market that is increasingly punishing for shorts, your stop probably needs to be a couple of percentage points out beyond what you think the normal stop is. So for here, if your stop is just above the high, which is 2.5%, you need to keep an extra maybe 1.5 to 2% beyond that. Okay, so you need to have almost like a 4.5% stop if you really, really think this is the top. Okay. All right. So we talked about different assets to pay attention to. There's different stuff that I'm watching right now in markets. We know SAND, right? These are the gaming tokens. Something else I'm watching closely is like, how are gaming tokens reacting in this environment, right? Why? Because gaming tokens, in my opinion, are, let's just say, the top tier of speculation in crypto. DeFi is definitely, up there, but like gaming tokens and meme tokens, sometimes, especially gaming tokens, will give you an idea that, oh, real interest or real money is flooding into crypto in a very high beta way, meaning lots of money is flowing into these projects because they believe that the next few months, there will be a lot of interest in crypto and markets will pop off. And so you want to watch gaming tokens because they're sort of a proxy of understanding liquidity and market dynamics, being profitable and beneficial for crypto. So gaming is where you want to be focusing on. So far, gaming is doing all right. I mean, in fact, like it's actually lagging behind most of the other sectors in the market. So I'm not quite sure, but I'm still keeping an eye on it. Okay, let's move sand over here. So I got, sand, PYR, Axie, Illuvium, stuff like that in this little bucket that I have for gaming tokens. If you have any other gaming tokens you want me to look at, let me know. And then you have some of these new coins that I've been paying attention to. Aptos is obviously one. Lido, I'm paying attention to. Optimism, obviously squeezing back up. So, these are new coins, new tokens with less sell pressure. Simply because, they're kind of new in the market. Audio is a little bit more different because it's music NFT token. I still kind of have this mentality that music NFTs might be a big thing, but I'm not quite sure when that's going to happen. I might be like 10 years older by the time that happens. So I'm not really willing to hang on to this unless I see real movement in something like audio. Canto, again, I think this is a NFT-based protocol or a platform. So yeah, all these different tokens, I'm still keeping an eye on. Other than that, still like Atom banging into this resistance point. So do keep an eye on that. Matic, we've already talked about. I like Matic. Polkadot, I don't really much care about anymore. And that's it. All right. Any questions? Anything specific you guys want me to look at? We already talked about equity markets, right? Dollar, I think, is range bound for now. It actually dropped down a decent amount. You can kind of see once it took out this high, big sweep down. 10-year treasury, same thing, I think. Same thing happened with a 10-year note, right? Had massive drop from 4.06 to down to almost 3.5. Moves like this, like when you start seeing bond market and yield volatility, I don't know, it may look good for equities and crypto, but something is like happening underneath the surface of markets and the economy that is producing this volatility. And I'm telling you, like volatility like this is generally not a good sign. Like anywhere when you start seeing this kind of volatility, I don't know. I'm not a big fan of it, especially in big markets like the bond market or the dollar. Okay. Oh, what are my thoughts on GMX? I love it. I mean, listen, I do think that there are a lot of competitors to GMX, but I think I discounted the strength of GMX. And, Arthur, I think, pitched GMX around like 25 or 30 bucks back here last year, right? So I'm a little annoyed that I didn't take him up on that thought process. But, if we look at GMX, right? So let's look at GMX from a market cap perspective. It's really not, it's big enough where like, okay, yeah, there's not that much massive upside left because it's close to like 700 million. So how much is it going to go up? Maybe 2 or 3 billion. So you got maybe a 2.5, 3x from here. So I do think that, yeah, it's possible, but I don't really know about like a 10 billion valuation or 5 billion yet, especially when you know that the interest in crypto markets is a little bit still depressed. I don't think activity and users have come back to that same degree. So I'm a little bit hesitant to say GMX, in terms of a protocol, will be like the leading protocol for all, DEX trading related activity. And if it is, great, could be massive, right? Let me see here. So another question is, with the centralized exchange risk, DEX seems to be the play into the future, but it's extended like everything else. Yeah, I do think it's extended. I mean, I agree. But yeah, I mean, listen, compared to, say, centralized exchange tokens and DEX tokens are clearly like undervalued, right? I mean, undervalued, and the market cap is significantly lower. So yeah, in that sense, if DEX tokens were to catch up to centralized exchange tokens in terms of market cap, or anywhere even close to market cap, yeah, I mean, there's, big upside left, right? Whether it's GMX or DYDX, things like that. Another question is, do you plan on taking a short position on Binance once we are overbought? Possibly, but like I said, right now I'm really not thinking on the short side. If you remember, aside from, I think, this short right here, for the most part, I've really not taken that many shorts this year. Just because I don't really see the point. The market was so heavily oversold last year. It's like, okay, I'll take a stab here and there, but that's pretty much it. I'm not willing to go short on the market and put my neck on the line and just say, oh, I believe this is a top and BTC is headed for 15K or whatever. I might think about it. I might talk about it, right? Because I see risks developing, but I'm not going to, put my neck on the line and start shorting the shit out of things when I know it was a brutal year last year and we're lifting off the lows, right? So, I try to do my best to look at both sides of the market and see what is, the best position to take. Yeah, if you have a GMX bag, man, I mean, you have really no incentive to sell, especially in the current market conditions, because, BTC is moving up. Hopefully other majors move up. Hopefully good assets like GMX with clear narratives, or even, AI narratives, hopefully those move up. I think AI is still the most powerful narrative, in my opinion, because AI is a narrative that people from outside of crypto can even buy into crypto just for pure speculative purposes, right? Because they could just say, oh, well, I think AI is going to be a big thing. Let me just punt the next, AI coin. Fetch is, I think, the top market cap coin in the AI world right now. I think GRT second, Ocean is third, and then PHB, and then RI, right? So you have some AI plays here and there, okay? But aside from that, yeah, you have things like Optimism and Lido. Agix is also AI. Aptos, another new coin. Blur is more NFT related. Canto, I think, is also NFT related. And then, like I said, right, you have the gaming tokens here. So yeah, all kinds of interesting stuff, for us to pay attention to. Okay. All right, everybody. That's all I got for y'all. Yeah, good luck. Take care, and we will catch up soon. All right. Cheers.